We're deep in the venture winter, and it's cold. I've seen too many startups which freeze and fail because they used fundraising strategy that used to be working in the time of prosperity of the last decade, but which are absolutely useless today. Cash burn left them with no fuel to keep the fire going. What is this venture winter? Financial pillars like Silvergate Bank, Silicon Valley Bank, Signature Bank have already completely collapsed this year. SP 500 index, which reflected tech giants like Uber, Tesla, Amazon, has plummeted, eerily reminiscent of the dot-com bubble burst back in 2000. Massive job cuts at Amazon, Google, and other companies shattered the lives of thousands of employees. Many of them received emails on the very day they had to clear out their desks. Even cryptocurrencies, once seen as a dream investment, are underperforming. Bitcoin has plunged, and FTX, the largest exchange platform, crashed. Given these icy backgrounds, it's no surprise investors become more cautious. What does it mean for you? How can you still secure your fundings and thrive? Stick around to find my own recommendation as an investor how to get your startup funded in this new reality. Welcome to Ascend Mind, a channel about startups and personal growth. My name is Valerie and I work in the venture industry for the 12 years as a startup founder, as investor, as a mentor for other founders. Today we're tackling a hot topic: how to raise funds during this cold venture winter. Take a look at this graph. Total investments in 2023 has dropped quite a bit compared to previous year. But there is some good news. If you're watching this video, you're probably interested in pre-seed and seed rounds, and the drop here is much smaller. Most of the decline happened with the companies looking for $50 million and more. In these uncertain times, investors are being more careful. They're focusing on smaller rounds and exploring new opportunities. Look at these statements. The biggest venture funds decided to play with the small startups. What a great news for you. Things have changed for the early startup though. In the past, showing a huge market and a potential revenue in 3 years was enough. But now, investors are not interested in potential unicorns. They're looking for centaurs, profitable and sustainable startups. This means your presentation should focus on real profits, not just ideas. You want to emphasize the positive side of the unit economy. How you can do this? In the end of this video, I will share my most important step you have to take. So first of all, don't spend too much on getting new clients. Choose economic convergence over the rapid growth. Keep in mind that the golden rule of the unit economy: customer acquisition cost should be less than average revenue per user. If you can show off positive unit economy and a huge market, you're ahead of the most price attention sent to the venture capital funds. Always ask yourself, does your business model focus on profits? That little plus is what investors are looking for. If they don't see it, they won't invest. By the way, if you want to improve your fundraising skills with help from the VC expert, follow the link below and book a call with me. We'll find out how to get your company funded. Second, try to get grants and the governmental support. This can lower the amount of the investments you need. And there are many grants and programs, but some startups don't apply this because they think that will be too much paperwork, we're not good enough. Believe me, that might work during the venture winter. Can be much easier than raise funds during this time. Strategy 3. Cut salaries and boost profit. A big part of startup expenses go to high-cost IT professionals. With tech salaries sky high, it's tough to find and keep talent. But professionals might accept company equity instead of salary. I recommend to offer potential hires 3 possible options. First, high salary and low equity. Second, low salary and high equity. And medium salary and medium equity as a third option. That helps you to attract talent and cut salary costs, which makes your startup more appealing for investors as you're becoming more profitable, and at the same time, you can show great talents in your pitch deck, which attract investors the most. As we wrap up today's video, remember, every winter is followed by the spring. And adapting to the challenging investment climate and focusing on profitability will make your company much stronger. And the saying goes, smooth seas do not make skillful sailors. If you want to know more how to hook investor attention, check this video. I've shared some tips from my personal experience. Don't forget to like this video, it helps a lot as I just started as a YouTuber. I will share my proven tips and strategies how to help you navigate in the world of startups and personal growth. See you!